Good morning, good morning, good morning. It's Thursday. It's just about Friday Eve. The week is almost over. Some of you are going to pretty much rather be relatively happy this morning. Some of you are going to be rather very disappointed or likely even depressed this morning. But either way, whether you're happy or you're sad, the week is almost over. But what a pump this morning. My goodness. To see the fact that SPY is literally legit about to open up over 3% is actually mind-boggling right now. It's really to say the fact that, wow, can you really chase this move to the upside even any further than what it is about to open at? But good morning, Prachi. Good morning, Mike. Why is Google popping off? That's actually a good question. I mean, it could be potentially related to just the fact that it's been relatively highly oversold. I actually thought it would be up more so than what you kind of indicated, but I'll get to the structure and why that particularly popped. But it does look, just looking at the structure, it's more so from a technical aspect. Basically, I'll just kind of give you a little bit of a gist. But if you actually look at the structure, and I'll kind of just draw it out for you, you can essentially see that this was actually in the process of making an inverted head and shoulders here right now. And that's why the reversal here right now is as sharp and as high as it is right now. So you see your left shoulder, your head, and your right shoulder basically curled right up off of that CPI data. You had the strong push. Now let's see where our major EMAs here particularly are off of Google, off of the daily chart here. Give you a better idea where you're pushing towards, and that would be climbing right in towards that 20 EMA here off of the daily, and that would push you right in towards resistance at 93.05. So that's the level that you want to watch. Otherwise, the level of supply that's actually more interesting here. If we do push above that 20 EMA, the level of supply that I'm watching here is roughly right around 95 half is where I have this extending if this does push just beyond that 20 EMA. All right. But yeah, that was primarily an inverted head and shoulders. And to be honest with you, there's a lot of different names that you could say structurally. With that little sell off that we had yesterday, a lot of different names kind of set up a little bit more of a similar structure in terms of the hourly charts, like you just saw I had up on Google. But I think I'm a little bit more compelled this morning to kind of give you guys a little bit of the psychology aspect here this morning because some of you are going to be rather down this morning at the opening bell. You probably went a lot more heavier than you should have with rather holding puts, and some of you are actually going to be happy and content with the fact that you ended up swinging calls. Now, point A, if you swung calls, you take your profits, you walk, you be happy for the day, and you come back next week. That would likely be my biggest pretty much statement to you. You take that money, you run, you come back next week, we'll deal with what the market gives us come next week. Those of you that took a loss today, this is where the psychology comes in because even myself, I actually stayed cash overnight. And yeah, that's hard to believe the fact that, oh yeah, I missed out on SPY ripping about 11 points. But on the flip side, I could have actually been down right now. And from the looks of it, a lot of those puts are going to open up near a loss of what, 100%, if not. So that's the bigger concern is that, yeah, your risk reward right now was not looking ideal if you basically look at how drastically the markets moved in one direction. All right. So that's the first aspect of understanding it. But then the second aspect of the psychology is that you have to get into the mindset of knowing that you can't play every single catalyst in the market. You are not going to be able to time the direction of every single catalyst when there's a spot in the market, right? We're always going to have the urge to always want to play major earnings, always play major catalysts, but you have to know when you're pretty much on the downside or where you feel like, you know what, your odds are stacked against you. You literally tried to feed into a downfall that we got into yesterday, trying to press into that with the entire flow obviously giving us those puts that came through. But the fact that we don't know if they were particularly hedgers or not. That was a major problem. A major catalyst is that the fact that you have to understand, especially when you're going with heavy money, is that if the market goes in the wrong direction, you're likely screwed. In which case that you went a lot more heavier than you should have. And I think I came on live yesterday and I kind of mentioned the fact that look, if you had the urge of holding something overnight last night, that you should have went light, just buy yourself one contract and let it ride. Right? But if you went in too heavy and then you end up waking up with a loss this morning, now is when you have to pretty much reanalyze the things that you've done wrong and reanalyze pretty much your steps moving forward from how you want to approach playing earnings, playing catalyst, and kind of get that aspect of saying, you know what, it's okay to miss out on opportunities. So right now, I'm actually glad about the fact that, you know what, I didn't follow the majority and I didn't go into puts, because now I can actually go in the market up and say, you know what, now let's go ahead and see. All right, do we get a pullback? Are we gonna get continuation? And I can go about my day, minimizing the fact that I'm gonna have a smaller loss potentially as I day trade. All right. So hopefully that just helps some of you that ended up maybe possibly taking a loss this morning. It's just a psychology. The trading psychology is actually the biggest factor, because we always have the urge of missing out on things. All right. So I kind of felt compelled to actually give you guys that little soliloquy right there, just to help some of you that are likely taking that loss this morning at the opening bell. All right. But those of you that took pretty much a nice little punch there with those calls that you held overnight, congrats. Take that money and keep it moving. All right. Now, let's get into SPY real quick so I can kind of give you a little bit of a structure here of what I was potentially seeing going into yesterday. Now, this is particularly the reason why I could not hold calls, and I actually dropped that in the dojo for everyone yesterday when everyone was saying the fact that, you know what, I'm holding puts. But I could not compel myself to hold puts, because those of you that know my trading style, that know and see me come on YouTube Live every single day, and know the charts that I particularly post, and I've said a number of times, is that a descending broadening wedge is one of my favorite patterns in the entire market. Hands down, one of my favorite. And it is also one of the most difficult ones to identify. It's not clear cut like looking at an inverted head and shoulders or a little wedge taking place. It is definitely much harder and more difficult to identify. But once I'm able to identify this pattern, it has not necessarily failed me as of right now. I think the chance of this failing was like less than about 10% right now, from majority of the times that I've been able to draw this out. But this is particularly why, all right, I'm looking at the structure going into yesterday. I'm looking at us just continuing to bleed into the day ahead of CPI. There wasn't necessarily any fear going into the CPI, particularly yesterday. And so I'm thinking, all right, why are we bleeding out so much? We're going into ahead of it. That was just the thought process in my mind. Obviously, no one knew the fact of what the number was going to be, which I'll get into in just a second. But structurally, this ended up playing out into an inverted head and shoulders. If I draw it out for you, which I will illustrate, you have a left shoulder, you have a head, and now if I draw out the right shoulder, which basically popped right off of CPI, this is potentially what you ended up getting. So you have a left shoulder, you have the right, and then you ended up having that all within a descending broadening wedge, which is typically a bullish pattern. So you ended up breaking right over that neckline, which is that white resistance of the broadening wedge, and now you're continuing to push right into my resistance, which, if any of you actually remember me mentioning yesterday in terms of range that I was looking at to trade from yesterday, I mentioned the top end of my range yesterday was 386. Obviously, I did not anticipate the fact that we would bleed out as much as we did yesterday, but that was where I was mentioning about the fact that I was looking at in terms of range. My upper part of that range was 386, and that's roughly exactly the resistance that we're sitting at right now, around that 386 half mark. So now I'm going to be looking to see, okay, now how much further can this potentially look? And to give it to you in a black and white aspect, if I actually draw out the length of this head from the top to the bottom, now this is going to potentially give you a little bit more of a head scratcher. Put that here from the neckline and push it up, measuring that head. That puts you right up to SPY 400. And now the question is that exactly where we're headed to right now? That's the bigger question, because if this inverted head and shoulder is going to play out as it is within a broadening descending wedge that is also relatively bullish, now the case is, all right, does this get full on continuation going into next week as we push straight up towards 400? And that would be the measure move of that inverted head and shoulders. So that's something to think about. That's pretty much just the black and white aspect on it, right? But now, logically thinking, all right, market's opening up over 3%. You would anticipate that we get a pullback here at market open, right? That would be the logical anticipation of us push of the market open here. Now, all right, if we do end up getting a pullback, what would be the most reasonable levels for us to pull back? That would be retesting the neckline of the inverted head and shoulders, retesting that neckline of the descending broadening wedge, and likely puts us back into support at 382 here on SPY. So 382 would be that level of support that I want to see, actually particularly hold, if we do get the pullback this morning. And that's where you want to see, all right, that will be the ideal risk to reward in terms of buying calls back for the upside, in which case now you're pulling back up roughly 4 points from where we are pre-market. and we look to see if that is ideally the ideal risk to reward in terms of buying for continuation to the upside. Otherwise, if we fail to hold 382, now we're going to come right back into where our current EMA support has confluence, sitting right at this 378 half. Because now you can see on the hourly, you have a lot of confluence here with that 200 EMA, with the 20 and the 50, all sitting from yesterday's price action right around that 378 spot. So if we can't hold if we can't hold 382, that will put us right back down towards 378, and that's where we're going to start to flirt with giving back all of these gains that we got from this morning. All right, that would be when that mental aspect is going to start to pretty much cross our minds once we start to roll under 378. That's when we're going to think about the fact, all right, this morning pump was a fluke, and then we're going to go right back down. All right, but if we hold 378, that's your next ideal spot to see, okay, now we may end up even having another inverted head and shoulders kind of take place here. Because if you see, there's another head and shoulders that may end up playing a little micro one. If we hold that 378 spot, now you can end up looking at a little smaller degree inverted head and shoulders. And that's why I would not be so quick to jump the gun, even if we retrace down towards 378. All right. So plotting you out these little different things here ahead of time is more so where I'm kind of setting you up, given the fact that we're opening up so high right now. The price range is already so drastic. So more than likely, yes, you're looking at towards the downside of retracing some part of this move, but how far down until you say, all right, this entire move that we got pre-market was just pretty much a wash. All right. So 378 is my bottom level of support where, okay, as long as we hold 378, I'm going to continue to be neutral to bullish. And then my minor support that I'm watching here this morning for a little bit of a more meaningful, like short term pullback will be 382. And then we see that straight up continuation for this uptrend. All right. So that's giving you all of those aspects. But again, 378 to me is that line in the sand to say, okay, we have basically the chances to continue to stay neutral to bullish. We break below 378. That's when the bearish mindset's going to start to kick back in, and then we're going to start to pretty much invalidate all of this morning price action as it's likely been pretty much a fake. All right. Kind of giving you a little bit of the economic aspect for also from the inflation data to give you a little bit of a pointer on that. The reason why we ended up seeing basically a lower inflation number than we all anticipated. I think we all go to the grocery store, we all go to the gas station. Those numbers are all still relatively high. And you're like, but why did inflation come down? The thing is that a lot of these major companies, and we've seen it over the past few weeks, past few months, they've all been trying to balance their books. We went into this quarter's earnings with a lot of these companies being on a down note. We expected the worst. And actually, in fact, going into next quarter, we're also going to be expecting pretty much relatively the same. But these companies have actually been positioning themselves rather well, cutting costs and trying to balance the books behind the scenes. And so we've seen pretty much the headlines come out, production's being cut, we're seeing layoffs have been taking place. That's all pretty much aiding a lot of these big companies that we're not pretty much seeing on a daily basis. We're all just being impacted as small men right now, pretty much paying higher costs at the gas stations and grocery stores. But at the same time, a lot of these bigger companies are in the fact of balancing their books, cutting costs relatively to balance their books and position themselves as inflation is still relatively high, to say the least. Right? So that's basically what basically aided to the fact that the number came in a lot lighter than what we all anticipated and gave us that jolt to the upside. All right. So that was just to give you a hindsight. No, of course, we all blindly say, you know what, but shit costs a lot. Well, I mean, it costs a lot for us, but a lot of these bigger companies are basically finding ways to cut their costs. And just like that, they're going to end up cutting you out of their company if be the case that it ends up aiding them to be balancing their books. All right. So that's that. The other thing is, of course, getting into individual names and the fact that we end up getting such a hell of a movement out of a lot of these different names. That's where a lot of these price ranges are pretty much going to be kind of out of ordinary right now. We basically can look at Tesla here. We had that nice little head and shoulders action that took place off of the weekly as I kind of get into some individual names here. We had the breakdown. We broke down below the 200, the weekly 200 EMA, and now we're finally able to find a little bit of support here, a little bit of reversal as we attempt to reclaim that 200-day EMA. Watch to see if we end up retracing back down to hold that 200 EMA as support at 187.48. That will be your level of support this morning to watch on any kind of retracement, and then look for continuation back to the upside. In which case, I'm looking to target 195 and then 197 half is what I'm looking at for continuation back to the upside. All right. So those are pretty much the two key levels. Otherwise, downside here, if you can hold 187.48, that's when we're going to start to pretty much flirt with that breakdown under 187. We trade back down to 179. And then my next key level here, if we continue to really roll over, would be down towards 173. All right. So that's looking at Tesla, just giving you those major levels there for that one. Boeing has been a monster, so this is one that I'm going to continue to see. If maybe tech ends up giving us a nice bigger pullback than we anticipate, look to see if Boeing is one that actually relatively continues to hold up the broader market aspect. And I'm going to see if this continues above this little support that I had previously, or resistance. 172. Above 172, this should trade up towards 179. It's my next level of resistance that I have for Boeing. Support I'm watching it to invalidate this overall uptrend would be 167. Would be that key level of support. All right. Let's see what else is on the radar here that we could potentially take a look at. Amazon was one that I've been watching. And here's actually the other thing that was kind of scratching my head as well, looking at Amazon. Amazon's already had roughly about 8 red days in a row going into this print for CPI. I had a little bit of support sitting right around 84. I'm thinking in my mind, I'm right. If we really just press into 84 on Amazon, I was literally about to go into this market open and say, you know what, I'm just going to buy calls at open on Amazon because that was a very major key support level on Amazon is that $84 mark. But nice to see that it's basically able to get a nice bounce. It's right back at the top of its resistance of where we relatively had a little bit of a 4-day consolidation sitting right at this little $92 mark. I'm going to watch for a breakout above 95.08, and I particularly believe I had weekly. Okay, no, it's not weekly resistance, but I do have this pushing up towards 102 potentially. 102 half is where I have for a continuation. If this does actually have a monster day today, I would not be surprised, considering the fact that Amazon has continued to press into the low a lot longer than more other names that are out there in the tech sector. So Amazon is definitely one that's kind of high on my watch list that I'm going to continue to look at. As long as it holds 89 this morning, this should get continuation. 102 half would be my continuation for the upside. But that's just one that I'm going to continue to see here. It needs to get that push out of this little consolidation zone above that $92 mark and break out above 95 for me to get into that for this little gap. You can still hear me, right? I just got a little bit of a connection error just now. If anyone could just let me know they can still hear me. By the way, didn't mean to ignore chat, but what's going on, Jose, Renee, Lobo, Prachi? FYI, tomorrow's a non-settlement day. Oh, that's good to know. That's really good to know. Can I please check on APPS? Let's take a look at APPS. Let's see what's going on with APPS for you, so I can get that on the radar. This is another one, kind of similar to how Amazon's been pressing into these lows. Biggest level of resistance previously was 12.22. We are going to be pushing into this level of basically distribution that you had, in which case 15.5 is your upside here on APPS. So 15.46 is what I'm looking at for your overhead resistance on APPS. So that will be the level as long as this can continue to hold 13.21, then you should be able to push up towards 1546 will be my upside target for you on that one. All right. So Prachi, hopefully that helps you. But yeah, I do actually like the fact that's a hell of a nice little V-shaped recovery you had here on the daily, as it's basically attempting to recover in one single day of what 8 red days relatively here on APPS. So 1546 would be my upside target here for you, relatively going between today and tomorrow. All right. Hotch, I appreciate that, by the way. So other than that, I kind of went through just a few names, a little bit of some snippets of names. Another one to kind of keep on the radar also is NVIDIA. Reason I say that is because they do have earnings going into next week. They've actually been holding up, I think, relatively a lot better compared to some other names. Obviously, Tesla continued to have been, showing relative weakness. Apple showing that relative weakness. Some major mega cap tech names, but Nvidia has actually been holding its own for the most part, relatively. Still holding on the daily above that 50 EMA. You have a nice little recovery. You're going to relatively attempt to break north over this 100-day EMA. That's where it's going to be pretty much key this morning. If we can break over 150.43, I have this pushing up towards 152.28, and then my next level of resistance on that is 156 for the next leg higher. For pretty much particularly the resistance that I believe we should push into on continuation to the upside, that should be likely hit by the end of the week if we can relatively hold and continue to push up on the broader market. All right. So that's one that's rather should end up holding. If you're looking for something to show relative strength, I would look towards Nvidia, especially given the fact that it's actually held up a lot better than other names have in the past few days, the past few weeks rather, and knowing the fact that it has earnings coming up, as this is potentially a little bit of a insight of early earnings run up, as it's showing such strong strength this morning, up 7%. I would not be surprised the fact that it's going to be up 10% within probably what the first hour of market open. That would not surprise me at all. All right, but that's just one. Knowing it has a catalyst on the horizon here within the next few days, you should rather think that this is going to hold up rather well. But support that I would particularly watch is this 144 high. 144.84 is support that I'm watching. As long as that holds, you should see continuation to the upside. All right, so that's another name to keep on the radar. Let's see if there's anything else I can kind of point out to. We looked at Tesla, we looked at Boeing, we looked at Nvidia. We could take a look at Netflix. Netflix is another one that we could take a peep at. You have a little bit of an ascending broadening wedge that's taking place on Netflix here. Now, this is a relatively bearish pattern, but typically this ends up pushing towards the resistance before we get that massive drop. So that's why I expect this to get a nice little recovery as we're getting a nice push this morning. And holy crap, that is up almost 5%. I did not know that till just now. That is a hell of a move this morning. It's just above my little level of resistance I have sitting at that 265.89 spot right now. That's what I was looking at for resistance. And then above that, I do have this pushing up towards 271.88. Ultimately, this can push particularly as high as 288 if we do see continuation here within the next day or two. All right. So that's another one to keep on the radar in terms of invalidation of this overall uptrend that we are seeing pre-market here. I would watch to see if this breaks down below 261, below 261, then we can start to see this look for a retracement right back down towards that 50 EMA, and that'll be support sitting at that 252 spot. All right, let's see what else I can take a look at. Prachi, you mentioned Baba. I have not looked at Baba. This thing has just been endless death. I'm not gonna lie to you. All right, let's actually look at the weekly first. I want to kind of give myself a clear image of how Baba looks right now because I have not looked at Baba in a hot minute. Overhead resistance, which is major resistance, is sitting at the 78 spot. That's your major resistance as it's pushing up 5% here this morning. So 78 is that weekly resistance that I'm watching. As I dial down into the daily chart now, let's look to see where some key resistance spots are. I would look to see as long as you can end up breaking north over 75, I think that's relatively where I would say you should end up getting a better breakout. Otherwise, I anticipate off of this push right here, your resistance that you're looking at is within such a short distance, sitting right at the 71 spot. That's where you're going to hit that resistance this morning. If you get any kind of continuation, I would anticipate 71 to be that overhead resistance. But I particularly like this over 75 more so, and then you play it to the gap fill that's sitting up at 81. All right, that would be just me in terms of that. The 71 resistance to me is just too close within distance for me to feel comfortable trying to even take that for a day trade. Just knowing that there's not much room for that upside, and being the fact that I know Bob has been relatively volatile, I'm not looking to necessarily just get about $1 and change move on Baba. I think you have better setups elsewhere. Over the 75 mark, then we could talk about that gap fill up towards 81, and I think that's more ideal type of trade that you're going to be looking for with the more upside. All right. In validation, though, I will say though, if you're looking to see if this ends up giving back these gains here pre-market, watch to see if she regresses back under 66 half, and then we could potentially look to trade this back right back down towards 63. In which case, you still have a wick low at whatever given point she decides to take this wick low. whether it be off of earnings or not. But 58 is still that wick low that still potentially has a chance of being filled more so than the upside of this gap fill. All right. So that's another name that you could potentially look at the radar. Again, market open is roughly just under 3 minutes here. If you held calls overnight, I highly suggest lock the profits, particularly walk away for the day more so than trying to force another situation with how high the market is about to open up. Those of you that took the loss, take the loss, but more so work on your individual trading, your individual psychology, especially as I say, this is one of those learning curves of saying, you know what, it's okay to miss major catalyst events. It's okay to miss major earnings. Now you actually know for future reference, okay, you know what? I'm just gonna let it play out and I'll play the continuation off of whatever be the case. All right. Otherwise, I don't think there's much else that I can go into too much. I think I covered most of the major names in the broader market here. Let's see what we get. Still looking at that retracement potentially to take place here this morning on that hourly here, particularly with this little inverted head and shoulders, a nice break over that neckline. Let's see if we get that retracement back down towards 382 as we continue to actually push above my resistance of 386. And I did not notice that we actually continue to push even higher. But overhead resistance next level will be 389. Above 389, then you have 392 half relatively sitting, and then we'll push right into 393. All right. So those are just key major levels that I'm going to watch here. Ideally, I would anticipate we get a pullback, but the way that things are looking, we may end up finishing this entire impulse up being relatively a wave three of some sort, and then we're going to end up getting the regression after the fact. I mean, it's all depending. That's why it's so key to go off of levels in terms of in not based on emotional bias, if you want to say that, right? It's always about key levels, and that's what you want to respect. All right. Other than that, though, less than a minute here. I'm gonna go ahead and keep the live stream up on Spy here, so you can particularly see it play out in real time with my chart. So other than that, though, any questions, drop it in the chat, and I'll be here to pretty much respond. As I'll go ahead and transition over to standard voice for our members, and then yeah, that's pretty much a wrap for me for this morning. All right, guys. Other than that, stay safe, trade safe, and hopefully you guys can close out in the green, especially those of you that took a note last night. All right, later, guys.